you can manage the accounts payable process with Therefore. This session will be hosted by Jennifer Schmidt and Mark Eost. Jennifer works for our digital engagement team and is responsible, along with Roman, for creating all of the wonderful e-learning content that we have. And I'm Mark Eost, the Business Development Manager for the UK and Ireland. Now, unfortunately, Jennifer is not feeling very well today, so most of this session I will be taking care of. In the background, Jennifer and Roman are monitoring any questions that you may have. And they will answer them accordingly. And if there are any left at the end, then I will try and answer those to suit. Before we start, we have a Q&A session. So as I say, please post any questions you have in the chat and the team will monitor those and respond accordingly. Please make sure that you put yourself on mute if you haven't been put on mute automatically by our system. The agenda for this morning, we've got a couple of announcements, and then we're going to look at what the process for accounts payable is. We're going to look at an overview of that process. Then we're going to look at the payment process and best practice for the accounts payable function. So with regards to the announcements, I'd like to just let you know that we now have, thanks to Jennifer and Roman, the wonderful refresher training for Therefore 2024. This course features 10 new videos with text descriptions and quizzes, and you can find all of that brilliant content on our e-learning platform, which is accessible via the extranet. The next big reveal is that the team have been working on some masterclasses for advanced technical training. One of the scenarios that will be presented is the HR scenario, where we include e-forms, categories, and some advanced workflow designs. And if we look at the content, or an overview of the content, there is a role play element, there's a job application workflow, and the use of case files. And then we have an onboarding workflow, an e-sign process, so integrating with one of the many e-signature providers that we integrate with, and then looking at how you could improve on that demo scenario that you will have built for yourself during that training. So that is due to be released in a not too distant future, so watch this space for an announcement from our digital engagement team. So on to this morning's session. What is accounts payable? So please don't be frightened by this process. It at its core is quite straightforward. It refers to managing the money that a company owns its suppliers for the goods and services that they buy on credit. And also in the back end, managing the record of each transaction so that they can have a full audit trail. Now, a lot of what confuses people when they're starting to learn or look at this process is the terminology. So if we do have any people from the finance side of a business, this will be everyday stuff for you guys. For everybody else, just a brief explanation. So on the left-hand side, we have what we call a purchase request. So that is an internal process for gaining approval to spend money on behalf of the company. And then that turns into a purchase order, which is sent to the vendor or supplier. So when the vendor delivers the goods, they will send an invoice, and the invoice could be known as a purchase invoice, but equally known as a supplier or vendor invoice. And then we have this little anomaly at the bottom called a credit invoice, which I'll explain a bit more about as we go through the presentation. And then on the right-hand side, we have a delivery note, also known as a goods received note or a GRN, which are the American versions of delivery note. Effectively, that is just a document that proves that the goods were delivered and is signed for by the customer. So let's have a look at some of the important areas for financial management. So, of course, cash flow management is absolutely critical to a business, and is often the reason that companies cease trading. Is it's not that they're not profitable, it's that their cash flow is poor. So being able to ensure that we pay our suppliers timely, and equally that we get paid in a timely fashion by our customers, is very, very important. And then, of course, keeping accurate financial records is absolutely vital to the health of a business. Keeping financial records that are accurate and the documents that relate to that is very, very important. And then the final piece there is making sure that operationally the business is very efficient in the way that they deal with things. And this is really where, therefore, comes into its own in streamlining the workflows and making sure that the documents and the data are held securely in a trusted repository. So in all of your customers, they will be using some accounting software, often referred to as an ERP system, which stands for Enterprise Resource Planning. And they tend to come in different sizes to suit different types of organisation. So when we have SMEs, or small to medium-sized businesses, they're often using products like QuickBooks, Sage 50 or Xero, because they are quite simple, they are quite low cost, and they don't have some of the financial constraints that some of the bigger products have. In the mid-market, we tend to see Microsoft Business Central, Sage 200, and products like Access are quite popular. And then, of course, when we move across to large enterprise, often we'll see products like SAP, NetSuite, and Oracle. But fundamentally, they all do the same thing. They record transactions for sales and purchases. Often they do more functionality as well, but the primary root of their function is to manage the transactions for sales and purchases. So one thing to really stress to you is that when we deliver a therefore solution, we are not trying to replace the accounting software. We are merely complementing what that product already does. So please make sure that that is firmly in your mind, because often it's very easy for customers to misunderstand and believe that what you're trying to do is replace their much loved ERP system. So just to restate, we're not replacing it, we're complementing it with functionality that the ERP probably hasn't got already. So let's go back and look at purchase requests and purchase orders, which is where things should start. So as I said, the purchase request is an internal process for gaining approval to spend money on behalf of a company. So let's say, for example, that I need to buy a new laptop. I might raise a purchase request internally, send that to our IT manager, who, once signed off, gives the purchasing department the approval to create a purchase order, which is then sent to our supplier in order for them to deliver the goods. Now, please bear in mind that a purchase order is a legally binding document, and it should include your terms and conditions of purchase. Now, often that isn't included, but it very much should be. Now, a purchase order can be used for different things, although ultimately it's just a request for goods at a pre-agreed price for a specific quantity of those goods. But if we look here, we can use a purchase order for a one-time order. So as I say, for something like me buying a new laptop, but equally we could use it to cover contract spend if we're refurbishing our office and we want to kind of use that to cover all of the costs for that particular project. And then we have something called a call-off order, or often known as a blanket order. And the best way I can explain that is, if you imagine a construction company needs to buy tons and tons of cement to complete a building project, they may send their cement supplier an overall order, a call-off order, and as they draw down the cement against that order, the goods are delivered and invoiced and called off against that total value. So if we imagine that the original order value was 100,000, if we order 10 bags of cement and it's 1,000, then we take £1,000 off of the balance of our call off order. The final version of a purchase order is what we call a retrospective PO, and this is when we create the purchase order after we've received the supplier's invoice. Now, they're not very common, but some customers do like to make sure that their books are very neat and tidy, and they will create retrospective POs just to make sure that everything balances up nicely on their side. So if we have a look at the next type of document in this process, it's the purchase invoice. As I say, this could also be known as a supplier or vendor invoice. And typically what happens is once we've sent a purchase order to our supplier and they deliver the goods or services, they then create an invoice and send it to us to cover their expenses. Now, in the ideal scenario, we raise one purchase order and we receive one invoice, and both the value of the items on the invoice match the value of the items on the order, and the quantities match as well. But the real world isn't quite like that. So often we find things like a partial delivery. So maybe if we ordered a table with 6 chairs and the supplier only had a table with 4 chairs, they may deliver the 4 chairs and the table and invoice us for 4 chairs and a table, and put the 2 remaining chairs on back order and deliver them at a later date with another invoice. But equally, they may invoice us for all 6 chairs and just note on that document that they still owe us 2 chairs. So you can start to see now that some complexities can creep into this process. But underlying, if you just retain the fact that we're looking for, in an ideal world, an invoice that matches up with our order and that we can complete the process quite simply. Now, another variation of that is that we may have sent the supplier multiple orders. So maybe I ordered 6 chairs and a table, and then I ordered 2 bar stools. They may invoice me for all 6 chairs, the table and 2 bar stools on one invoice against 2 of my purchase orders. So this takes a little bit more management on the customer side in order to process those efficiently. So the other document that you need to be aware of is often called a credit note or a credit invoice. And this is merely a vehicle for reversing a purchase invoice. And what I mean by that is, in our accounting or ERP system, we cannot delete transactions because it will break the audit trail. So in all ERP systems, it is impossible to delete a transaction. So the only way to correct that is to process a credit invoice, which effectively reverses the purchase invoice. So it will be the same values, but it will be a credit rather than a debit. I hope that makes sense. Then the final documents in this process are the delivery note, and as we said, that could also be known as a GRN or a goods receipt note. So typically, when the supplier has packaged up all the goods or services, they arrive at your premises and they get somebody to either sign a piece of paper, and they normally give you a copy, but more frequently these days that is done on a digital device, and you merely sign, and you'll probably receive an emailed version of that docket once they get back to their depot. So again, quite a simple process. However, just as the same with invoices, some complexities can creep in. So we could end up with items from more than one order on a delivery note. We could end up with a delivery note that matches one invoice and one order, which is our perfect scenario. As I say, it's standard practice that the customer is given a copy of that as evidence that they've signed for the receipt of those goods. And equally, that is the proof that the supplier delivered those goods and that everything was checked off and correct by their customer. Now, please don't be scared by what you see on screen now. We're going to talk about nominal or GL coding. This really is no different to when you manage your personal finances. So let's say that you spend some money on holidays, you spend some money on socializing, and you spend some money on utilities bills. You may categorize those in your expenses accordingly. With a business, it's fundamentally the same, but they use numbers typically to identify the type of expenditure. So if we look down here, kind of just slightly to the bottom, you will see some numbers 5,000 to 5,999. And that, in this particular case, demonstrates that they are the cost for goods purchased. Now, please don't take this structure as being correct for every customer, because when they create something called their chart of accounts, they can determine what number ranges apply to what categories. So this is just purely an example. But as I say, in this particular situation, the range 5,000 to 5,999 is used for goods. Now, to make this seem a little bit more complex, and it really isn't, we can add even further coding. So we could add a cost center and a department code. So if we look over here on the right-hand side, we can see that we have a cost center as IT, a department as East London, and a nominal code of 0001. And if we look down below this table, you will see that the cost centre is IT, the department is East London, and the nominal code 0001 relates to fixed assets. So from a finance point of view, in the background, now they can analyse their spend in more detail. So it just gives them a lot more granular control over being able to identify where money was spent. In the same way that in a personal situation, you might want to drill a bit more down and say, okay, we spent £1,000 on utilities, but how much of that was spent on gas and how much of it was spent on electricity or water, as an example. So best practice in our company is to create a purchase order for everything that we buy. And then we can sign that purchase order off, so it's approved. And then, of course, when the invoices come in, if they match our purchase order, we don't need to approve the invoice. And all we need to do is check that the values and the quantities marry up with what we ordered, and we can pass that through our system very, very quickly. And this is where we can gain some real efficiencies for our customers in encouraging them to use purchase orders as much as possible. And then, of course, therefore, we can either take a copy of the purchase order or maybe just receive the data from their purchase orders and use that to marry up against the invoices as they arrive. Now, there is always likely to be an example where customers receive invoices that don't relate to a purchase order. So we call those non-PO invoices, and they typically will be for smaller purchases, maybe the window cleaner or maybe utilities bills, where it was almost unpredicted spend. So invariably those invoices need to be approved. Sometimes that is done by the accounts payable team, but in some cases it is sent out to business managers to sign those off before they are paid. So you can see now that possibly we need two workflows, and with the PO-based invoices, assuming that they match very well, they can flow through and we can get some huge gains in efficiency in the AP department. We've just covered the difference between a PO invoice and a non-PO invoice. But if we just take a quick look at some of the kind of efficiencies that can be gained. So with a PO invoice, the purchase order should be pre-approved versus a non-PO invoice where there will be no approval in advance. The process for PO invoices can be very structured, whereas a non-PO invoice process typically relies on that approval step before payments are made. But all the way through here, you can see a common thread that purchase order based invoices are much more structured and easier to control and give us a better route to creating those efficiencies. So the next thing for us to look at is the end-to-end process for when we receive the supplier's invoices or the vendor's invoices. So the first step is we're going to receive a document. Now that could be paper, but more frequently they are received as PDFs attached to emails sent to ap@therefore.net or whatever the customer's accounts payable inbox is called. And then the next step for us is to extract the data using smart capture or another intelligent capture application. And then we want to try and match that against the order and delivery notes. And the third step, is to code that invoice and approve it if necessary. So as I say, hopefully they're using purchase orders. So the only documents that should need approving should be the non-PO invoices. And then the next step is to enter the data into the ERP system or the accounting software. But along the way, we want to make sure that we deal with any queries. So those queries will typically be around the quantity of goods delivered. So if you remember my scenario of ordering 6 chairs but only receiving 4, or maybe price variances. So maybe I ordered those chairs at £150 each, but the invoice shows that they are being invoiced at £175 each. I need to query that with the supplier. So this is where the real value of an AP person is in this processing, being able to deal with queries efficiently and quickly to make sure that everything balances correctly. Now, of course, the other steps here are that we want to keep accurate financial records. So therefore, we'll very quickly and easily grab a copy of all the relevant documents and store them securely in the right repository. And then the final step is when all the checks and balances are made and we have hit the supplier's invoice payment terms, that we pay them. And that really is the process. Now, there are lots of challenges in this process, and this is why we need intelligent people working in the finance department to unravel some of these mysteries as they are. So, some of the things that happen at the moment is, if customers are receiving paper documents and they're receiving emailed invoices, I still see customers printing off those emails, manually typing the data into their accounting software, and then going through a scanning process to scan everything back in to archive it, which is absolute madness in today's age when the technology exists to do what we will look at shortly. And then they often have difficulties in matching invoices to the purchase orders and the goods that they've received. Some of the things that cause them challenges are that they have to wait for people to approve documents in their own business. So maybe they're waiting weeks or whatever. And in the meantime, they are being chased by the suppliers for payments. Whereas if we flip that on the head and we have efficient processes, we can now talk to our suppliers about receiving early payment discounts. So that is when we pay them before we reach their terms of payment. And often they will give us 2 or 3% discount for being a good customer and paying early. So you can see that there's lots of things. There's negatives and positives in this process, and we're trying to eliminate the negatives and deliver a lot more of the positives. So obviously with Therefore we have Smart Capture, which is an incredible module that we have in our portfolio, and that is designed to capture data directly from invoices, purchase orders and delivery dockets. And as you can see here, we're looking to process an invoice. And Smart Capture is incredibly accurate. It takes minimal amount of time to implement. It is hugely accurate and will speed up the process no end once the customer is used to pressing the simple buttons that are in the user interface. So if we move on to the next step, we're going to look at two-way matching. And what we're looking at here is the therefore, one of the therefore configurations. And we can see here over on the left that we're looking at line items extracted from the invoice that we were viewing in the previous screen. And on there we can see a Ford Focus 1.9 TDI car at 26,580 dollars, pounds, euros, whatever the currency is in this particular case. And on the right hand side, we can see the line items from our purchase order, and we can see not only the description that the quantity is correct and that the unit price of 26,580 is also correct. So the software has automatically matched those two lines for us together. And the same applies coincidentally to all of the other items on that order and invoice. Now, a three-way match is when we bring in the goods receipting information so that we then know that not only did we order those goods and we were invoiced for those goods, but we also received those goods. Now, one of the other advantages with therefore is that we can automatically link documents together using common references. So in this case, we're using the order number to tie together a bunch of documents, but this really adds some efficiencies for customers when they can retrieve one document. So let's say they go and retrieve their purchase order, and just attached to that document is the supplier's invoice or possibly invoices, and all of the delivery dockets that relate to that transaction. So now we've created electronically a nice tidy bundle of documents that relate to this specific transaction. And from an efficiency point of view, that is absolutely magic. So some of the operational benefits that you get by deploying therefore to complement the ERP system, as I've said a number of times, we get some real efficiencies when we're specifically processing PO-based invoices, but also we do speed up the process and make it a lot more visible for the non-PO invoices, because we can see where they are in the approval process, who we're waiting for to approve them. So we now have much better visibility. We are saving a lot more time because we're using technology like Smart Capture to extract the data in a very accurate way, saving the accounts team having to type all of that information into their software. We've made the approvals process much easier and more visible. And another key point is with the great capabilities of Therefore's API and REST calls, is the ability to integrate directly with the customer's ERP system so that the data is synchronized between those two platforms. So not only do we pull into Therefore things like the supplier list and the nominal code list, we feed back to the ERP all of the invoice details in a very straightforward way that doesn't take any effort on behalf of the user. And we'll look at that in the demonstration shortly. Now, when we go up in the tiers of management and we go to finance manager or finance director, they're looking for different things. So they're not looking for the day-to-day removal of tasks, although that benefits them. They're looking for the really key things like detecting fraudulent activity. So there's very much an increase in fraud attempts where customers receive invoices from known suppliers with different bank details on. And often these have been cloned by fraudsters. And what they're trying to do is to get the customer to change the bank details and make a payment to them unbeknown to them. So it's very important to be able to detect that sort of activity. And we can do that in Therefore by setting up a process to check the bank details for the supplier at the time we're processing the invoice. Another area of interest and concern is being able to detect duplicate invoices. Now, sometimes these are sent in error, but equally they could be malicious attempts to get customers to pay for the same things more than once. So a duplicate invoice, again, going back to my example of ordering a table and some chairs, The invoice may arrive, it goes through my system and I process it and pay it. And then some weeks or months later, the same invoice is submitted. And because I haven't got the ability to identify duplicates, I just process that and pay it again. Of course, we want to make sure that we stop that sort of activity. Now, other areas that are important to the financial management of the business is being able to improve the relationships they have with their suppliers by being a good payer and a good customer, which often leads to discounts, whether that's early payment discounts or loyalty payments. We also want to make sure that we are recording a full audit trail of all the transactions that go through our business, because the health of our organisation financially is absolutely vital to the financial management and the owners of that business. Now, the other things that therefore delivers very easily is because we're working with digital files, we eliminate that risk of a disaster occurring where we lose all of our financial records. So now we have the comfort of knowing that we can sleep at night because everything is backed up and taken care of. And additionally, because we are capturing so much data, we can provide some really meaningful reports and analytics for the customer. So whether that's looking for slow payers within our, slow approvers in our organisation, bottlenecks, high value invoices that need to go through a more senior level of approval, you name it, we can build the reports and the activities to manage that sort of thing for the financial management of those organisations that we deal with. Now, if you're in a sales role and you're wondering who to go and speak to in your customers, there are 3 job roles that I would thoroughly encourage you to get familiar with. So the purchase ledger manager would be my default person to go and speak to, because they are the operational manager for the team of people that on a day-to-day basis have to key in all the invoice details, match up the details from orders to invoices to goods receipts, and make sure that the books tally up. But they're then feeding that information up the chain to the finance manager and the finance director, who, as we've just seen, have got similar priorities, but they've also got additional priorities over and above what the purchase ledger manager has. And so we need the buy-in from the FD or the finance manager to get them to agree that, applying these efficiencies into their business will be hugely beneficial to them. Now, I'm not proposing to go through this list of terminology, but to suffice to say that in this slide deck, there are a couple of slides that have got the commonly used term on the left-hand side and a description of that term on the right-hand side. So if we just take a couple of examples, we've got purchase invoice on the left-hand side, and it's a document from the supplier detailing the items that they have supplied and the price. If we take nominal code at the top, we looked at that as being able to categorize our expenditure. And so it's a sequence of numbers used to analyze spend, normally in the following structure. So department, cost center, and nominal code. This can vary business to business, but that is a very, very common structure. There's a few more terms here. So we looked at two-way matching. So that is when we match the invoiced items against the purchase ordered items. And for those of you that are curious, a three-way match, as I said earlier, is when we match the invoice items to the order and the goods received. So hopefully that's cleared up some possible confusion. If you want to learn more from Therefore, there's a number of sources of information. So please subscribe to our LinkedIn channel. We post every couple of days some useful insights that maybe you want to share with your customers. But equally, we have a Therefore newsletter. So please subscribe to that, because our team in the background will keep you up to date with all things that are current and all things that are interesting to your customers. If you're looking for video content, please visit our YouTube channel or reach out to our media team. So that's the end of the presentation. So what we're going to do now is flip across and look at a demonstration. Now, I did record this yesterday to avoid any possible technical issues, bearing in mind that Jennifer wasn't available today. So what we're going to look at is 6 steps. The first step is capturing the invoice, and we're going to do this as a manual task in Outlook. However, in the customer's live environment, they would probably have this AP inbox, and that would be monitored by Therefore Content Connector to bring those documents into the system automatically. Then what we're going to do is look at how we check and verify the captured data inside Smart Capture. Then we're going to flip over to Therefore and check whether the purchase ordered items match the invoiced items and add our coding. And then we're going to post that data into our account system. And in this case, we're using Microsoft Business Central 365. And then the last 2 steps will be to go into Business Central and have a look at the data, and also show you the link from Business Central to open the document that sits in Therefore. Now, those last 2 steps in the production environment of your customer are not necessary on a day-to-day basis, because they will be confident once they've used the software that the data is there for them in the right level of accuracy. So let's start the demo. So here you can see we have an invoice from Fabulous Cars, and I'm just about to put it into the Smart Capture queue, and I don't need to do much at all. Then we flip across to Therefore to the Smart Capture queue, and before we check the Smart Capture process, we can see this is the workflow that this document has gone through, and it has now reached the user review stage. So if I open that document, you can see the document on the right hand side, and as we tab through the data, you can see where the software has picked it from on the document. Now this, as I say, is incredibly accurate, but if there are any discrepancies, the user can correct it right here in the user interface. They can add additional line items, they can do whatever they need to do here. So once they're happy, they can confirm that, and it has now gone across to Therefore. So we're going to look at the data now inside Therefore. And over on the left-hand side in this configuration, we can see the same invoice number against the same purchase order number. And we can see all of the items that we extracted from the invoice. And on the right-hand side, we can see the items from our purchase order. So now we're going to add some coding to this invoice. And for the purposes of this demonstration, I'm just going to use the total value of the invoice, which is 41,471. As the entire code. And then we're going to post that into Business Central, which can happen automatically. So now if we flip across to our Business Central interface, we can see here this transaction. And if we scroll down, we can see all of the items from that invoice are saved into our user interface. And we can also see the link to the document. I'll just go back there because that happened a little bit quick. We can see here the link to the invoice, and the invoice is stored in Therefore. And if we fast forward a little bit, by clicking that link, we open up the document inside Therefore. And over here on the right hand side, we can see that there are 4 linked objects. So we, unfortunately, I can't expand that at this moment in time because that is a recording. But what we know is that behind that will be the purchase order and the delivery notes that came in with that invoice. So that's the end of our presentation for this morning. I hope it's been useful, and thank you for your time. Enjoy the rest of your day.